Hello everyone and welcome to this new video. Today's headline is unusual, dramatic, and market relevant. President Donald Trump just threatened to impose tariffs on country that doesn't support his plan to take over Greenland. This is not just political rhetoric. It touches trade policy, geopolitical risk, allied relations, and even commodity markets. Trump said, quote, I may put a tariff on countries if they don't go along with Greenland because we need Greenland for national security. He repeated this as a White House event, and it comes amid strong opposition from European leaders and a bipartisan US congressional delegation. This is not a minor threat. Tariffs are trade weapons that historically move markets, influence currencies, and create global risk premiums. Today we break down what's behind this strategy and how markets are reacting. From a geopolitical and market context, let's unpack the situation first. Well, Greenland is not a US territory. It's a self-governing part of Denmark, a NATO ally. Trump has renewed ambition to acquire it for national securities, arguing it's strategically critical for Arctic defense and even mineral resources. Denmark, Greenland, and European allies have rejected this idea strongly. Secondly, Trump's treat it as to use tariffs as leverage. Very important, similar to past tariff threat on France and Germany over drug pricing negotiations. Instead of directly military action, tariffs become a trade correction tools. So why does this matter to markets? Tariff threats tend to lead to currency volatility, especially if they target major economies. They create uncertainty premiums in global equities, particularly in sectors sensitive to trade and supply chains. Commodities like oil, metal, and can react sharply. Geopolitical risk pushing price up if supply routes or alliance shift. These are not impersonal tweets. They are real policy signals that market pay attention to. From a technical perspective, let's look at the market's fear gauge, the VIX, around geopolitical threats. We often see a spike in volatility if VIX is moving up in response to this news. That tells us the traders are hedging risk, not chasing allies. Okay, from a chart analysis perspective, when we look at the S&P 500, well, the price have still been moving since last time, so nothing much. Even though the S&P 500 is showing some kind of consolidation inside the triangle wedge. Let me draw the triangle. The price is still squeezing inside the triangle wedge. So the recent news didn't spark anything special. But what we want to see is actually the VIX, the volatility index. Generally, when we have this kind of information, the VIX, based on geopolitical threats, sometimes we have a spike in volatility. So if VIX is moving up in response to the news, that just means that traders are hedging risk, but they're not chasing rallies. For example, here we have this gain of 2%, almost 3% here, almost 4%, I will say. So this is what I'm talking about. It means that traders are hedging risk, so they're not chasing rallies. In the future days, we will actually see if the price continues to rise or if it was just noise. We need volume. We need big volume to this. So if it's noise, the price will just continue to consolidate, even continue to go further down. But if it's real, the price will spike once more. So if the news stays for a long period of time, let's say even 1 or 2 weeks, we can clearly see volatility of the index of volatility start growing further and further, because when there is this kind of threats, especially regarding war, because Europe is trying to maintain some kind of defense growth and everything, we can clearly see that if we continue to have this kind of news, not noise, the price can start growing and growing further. And traders will definitely start, I'm talking about buyers, they will definitely start to step in and the price will just continue to go higher. Now, let's look at oil. Same thing. Remember, recently the price got rejected by the 200 moving average. And right now the price is trying to respond to this major level here, which is very important. The price is trying to respond to this major level here. So based on the news, we got yesterday a gain of almost 1%. But the price directly got rejected again. We have rejection. If you go to the 4-hour time frame, we see that the price got rejected. So we can clearly see that after maybe the end of the day, the news, if it's any, we can react again here. Because here we got a rejection, but that rejection is just dancing inside a major level of support. So if you have a break of the structure of this level with a big momentum, I think we will continue to go further down. But if the news or the threats that Trump established is not a noise, we can see a big reaction here going further. Now, let's see the S&P 500 compared to the Euro stocks. S&P 500. Let's see here, Euro stock. The movement is practically similar. I'm not saying it's similar, but it's practically similar. Why I'm saying similar is because of the trend. We can clearly see an uptrend here on S&P 500 and also an uptrend on the stocks 15 here. But what we want to notice is this. A divergence where European index falls relative to US market could reflect tariff risk being picked in one of the conditions more than the US. Same thing here for the Nasdaq. The Nasdaq is still growing, nothing special. Even though we have this kind of retracement, this retracement just reflects what have been happening to the market recently. And we are still inside a consolidation. So this consolidation is very important because it will directly tell us the future direction of the market. Either it will go higher or it will go down. But the recent news are showing something different. AI are giving news. Trumps are giving traits of news. Everything is just trying to squeeze the market for in one direction. But the S&P 500 is still growing. It means that stocks, either big stocks or small stocks, are in contradiction. Even though the big stocks are leading the way, that's why we have this continuation of the uptrend. So buyers have to be patient. They have to observe. Don't have to rush and enter wrongly because risk is very important here. We have to wait if the price break a certain level of support, especially this level of support with big momentum because price have been going up and down, but we don't have volume. If the price breaks this level with big momentum, we can expect a further collection of liquidity here before resuming. Remember, this is just a prediction based on what we know on chart analysis, on price movement, because price always move with liquidity. No liquidity, no volume. So the price have been going inside here, but the volume is just intraday. The price might come and collect daily liquidity to have bigger volume to continue to go further up. Same thing for the volatility for the Eurostox 15. So we have to be careful when we watch it and we have to know exactly what is happening. So based on Trump's alert, so we should be watching this carefully. First, defense and aerospace stocks. Heightened geopolitical tension. Even talk or territorial claims can lift defense contractors. Names like Lockheed Martin, Northrop Grumman, and BIA Systems are worth watching if risk premium rise. 2. Trade sensitivity sectors. Tariff means cost pressures. Sectors like autos, semiconductors, and industrial often get hit first when new tariffs loom. Thirdly, currency and bond markets. Safe haven flows may benefit the US dollar or treasuries, while the euro and other trade link currencies may weaken. This is not technical analysis alone. We are watching where capital flows as policy shifts. In conclusion, the bottom line is going to be this: tariffs are not just taxes, they are strategic tools that reshape global trade, relationship, and risk sentiment. When they are tied to something as radical as a territorial takeover idea, markets don't react to whether it will happen. No, they react to uncertainty and policy risk premiums. So I want to hear from you guys. Do you think markets are underestimating this geopolitical risk? Will tariff against allies trigger broader trade conflicts or just temporary market noise? Comment risk or no impact and subscribe for daily analysis where we connect politics and price action every trading session. Thank you for watching. Have a nice day.